Hi folks, it's Adrian CryptoBirb speaking. Welcome to today's Friday webinar. The Fed's decision to pause the rate hikes, has been taken as a little bit of a hawkish tune. And a hawkish tune, the markets reacted overall negatively, even though there was a little bit of an elevated noise and eliminated trend out of the context as it typically happens around the even trading days, just like it did for the FOMC day on Wednesday. The trends actually in the short term clarified to the downside, right? The markets resolved to the downside. We're gonna discuss today what's happening with Bitcoin among other markets and how it actually positions for the major Q4 rallies. If you're ready to hear this and more, make sure to stay tuned. We're going there right in a second. Hi folks, again, it's Adrian CryptoBirb. Welcome. How is everybody doing? Let me know, guys, you can hear me and see me properly, clearly, that everything is fine on your end in the receiving side. I'm right here waiting for a comment. So drop a comment if everything is all right, because there's a bunch of topics, a couple of topics that I want to address today after this overall, I should say, hawkish tune that we got out of the FOMC, right? So we stay at 525 up to 550 for the Fed fund rate, right? We took a pause. Although this pause was not necessarily immediately associated with the end of the rate hiking cycle, right? It may take a couple of months, may take a couple of considerable periods before the Fed actually turns the monetary policy, right? Since the next year, it's an election year, typically, the ruling party, the governing party likes to win. And if they like to win, they like to introduce opportunities to the people, to the voters. And the voters typically get to see arguably the best version of economy that there can be, the best version of a country, right? The biggest gifts, the biggest amount of basically money given away right around the election time, right? So that's probably not going to be different in the next year. However, until now, or until then, we are in the pre-election year. In the pre-election years, since the 84 occurrences, right? We've got 83 out of them with 99% of chances almost leaving the markets bullish, right? And 83 out of 84 chances, 83 out of 84 occurrences for the pre-election year since the Second World War, we only had one loser. One loser in 84 years of data. This is not something to ignore, right? So at least it gives us the expectations and a benchmark estimation for what is ahead if the market closes higher than it opens, especially in most favorable conditions of the midterm elections bear market that happened last year, right? So there's a whole bunch of discussions that we are having on the seasonality part. And speaking of seasonality, you might be acquainted, or you might know basically the works of the one and only Jeff Hirsch of the Stock Traders Almanac. And ever since I saw Jeff in New York City for the CMT's 50th anniversary symposium, I was blown away with how excellently intelligent this person was, right? He's given so much of the credibility to the industry in the statistical manner, in the seasonal manner, observing seasonal patterns, observing data just like the one that I'm talking to you about the pre-election years, that it's definitely not something to be ignored. And what I can say is that the next week there is something coming. There is something coming from Jeff, and it's gonna be big. That's all I can say for now. I leave you there with a little bit of uncertainty. However, all I can say is it's gonna record crypto, and it's gonna be worth waiting, right? Still, good to have you, everybody. Good to hear you, Eric. Good to hear that everything sounds clear from Eric and Anup Sharma. Good to see you guys. Drop a comment if you're watching that on YouTube. If you're watching that on Twitter, also let me see it, right? I have my stuff right in front of me. I can see your comments. I can read your questions. So do not hesitate to drop some good vibes, because you guys, I want to salute you. You are the pioneers. You are in the disbelief that typically happens in September, disbelief part of a cycle, of a crypto cycle, of the new bull market. that started in 2023. That takes us closer to the halving, right? You are in the possibly best imaginable condition to take the opportunity. And by watching this video, by watching this screen sharing charts that we'll be having in a couple of minutes, by giving yourself a chance to watch this webinar, well, just maybe it's gonna be you who wins this excellent rallies in the next years. Chris Locke, hi from UK. I love you guys in UK. You are awesome people. Listen, let's get it going. Let's give a deeper dive into what's happening with the market. Let's take a little bit of a major market overview, mostly in green, right? Mostly in green, only 3 out of 10 positions. The French, German DAX, and Euronext basically are down. Everything else on the European, on the American side up there is basically bullish, slightly bullish, right? It's not the most bullish, it's slightly bullish somewhere. 0.15% Dow Jones Industrial up after a little bit of I should say, well, dangerous play zone up there, right? We are hovering after the bearish rejection following and induced by the FOMC, accelerated by the FOMC decision to pause the rate hikes. We're talking about the downward movement overall, right? This downward movement basically is taking us into the range lows of this quarter, right? Since we got the bottoming, since we got a topping pattern, this kind of like a whatever we named that, this rounded pattern, the broken support, whatever we named, it doesn't matter, breaking through the 20-day moving average up there, support at 35,000 for the Dow Jones Industrials. We only watched the market kind of like move sideways. Most of the time was slightly down. The market is up 0.14% or 0.15. It's bouncing a little bit higher off the range lows of August, right? So 34,000, again, round numbers. There's a little bit of magical thinking. We tend to mostly remember the round numbers, right? We tend to forget the odd numbers. So the more round, the rounder the number is, the easier it is to remember that, which is why often those prices and movements often stop around those regions. Such as you had support as 35,000, it acted as a resistance. So polarity has flipped, right? Broken support turns into resistance successfully. And here we are defending so far on the day, perhaps, and depending if it's a bearish close or a bullish close for today, we may head on the next week's open, either to retest 33,800s at a 200-day moving average, which kind of like is in a bullish mode, right? This is a bull market. If the 200-day moving average is inclining, it is a bull market. There is nothing to argue. It's undeniable, right? This is not my opinion. If the line is moving up in the upward trajectory, this is a bull market. Because we're not talking about accidental movements. We're moving about 200 days of averaged data, right? This is a lot of information. And if a lot of information is sequencing in an uplifting manner, this is not a coincidence. So, of course, local seasonal weakness that was expected. It's in line with the expectations. Quarter 3, August, September, October are typically, well, the bottoming months are typically the corrective bottoming months for stocks and for cryptos as well. September is the only losing month on crypto on the record, right? Which is pretty interesting. So we are somewhere over there, kind of like hanging, off a cliff. And depending if the close is bearish, probably people will read that as the negative sign, probably closing and getting us closer to the next week's retest. Next week's retest of the 200-day moving average, support 33,800s. Again, same reason, anchoring effect. We often would take this frame of reference and set it as a benchmark. And because of that, we would set our orders around the benchmark or under or above it. Right? So we kind of like tend to stick and glue towards certain numbers, even though, at times they may not necessarily make sense. Round numbers. What is special about the round numbers is just the way we remember that better, right? Nasdaq Composite is a little bit stronger, just tiny little bit, right? It's a little bit stronger. There was a little bit of a breakaway up there, which was proving a lot of danger. Still, we're some sort of like having an inside day. We're not exceeding yesterday's volatility. We're not exceeding yesterday's range, still kind of like encapsulated in the yesterday's price action. Depending on the close, arguably with the gap over here, which is fairly dangerous if we close lower, it may take a little bit more aggressive stance towards the downside, towards 12,500s. Again, round number, combination, and confluence of the 200-day moving average. So that's not something to be ignored, potentially may land somewhere over there. Similar for S&P 500, right? Getting close to the broken support, 33,500s. Again, you may call that a little bit of a head and shoulders pattern, right? Still, what the markets often like to trick us with is a false breakout. It kind of like just teases us somewhere at the bottom and then it shoots up in the opposite direction. Remember that the seasonal weakness of August and September is coming to an end, right? So the closer to October, the closer into October, into November, the more fake outs and the more upward lifting tendencies we may actually see and discover. So that being said, again, take this into consideration that this is a corrective tide that may or may not be coming to an end. We know that the support, and for the anchoring reasons, again, anchoring effect, it's information processing bias, behavioral bias that we often fall for. Still, it makes us worry because if this level kind of like showed a little bit of support in the past, there is a chance that even though I may not necessarily agree with it, many traders will look at it, and just because they look at it, and they actually work. So self-fulfilling prophecy or not, we are in the potential pivotal zone area. If it pulls back higher, right, to recover, I should say 4,500 is likely going to be the stopping point, at least the area of the first resistance, the area of the price barrier where the orders might be clustering. Until then, right, we're kind of like, again, hovering, right, and hanging off a cliff. If the cliff actually bursts and we break off this cliff, it may happen that 4,200 is going to be attacked in some first weeks of October, I would argue. Still, of course, remember, we only know what's happened on the left-hand side for sure. We have no idea what's happening on the right-hand side. We may immediately rally from here to the new all-time highs. We may break and kind of like just dive right below the 200-day moving average. Nobody knows that. I'm just giving you some expectations to be potentially had. Right? So again, moving on, we're talking about the actually let's take a more decisive look at there. Right? So the Dow Jones Industrials at the peak, again, 43,800 as a potential support. There's a little bit of a declining manner, fake out at the top, right? We did fail the top breakout right at the lows. Again, arguably, this is something to watch. Getting closer to support, not necessarily a good idea for selling out, I'd argue, right? More so, it could be for buying. Dow Jones Transportation at the bottom is more leaning towards a regular kind of like a descending channel, more of a corrective wave. Here it's a consolidation and some triangular pattern, right? So it's a triangular coiling pattern, contracting consolidation. Here it's a nicely kind of like a laid down downward trending channel up there, right? So I would, again, the disparity between Dow Jones Industrials and the transportation is not necessarily the best sign, right? Which tells me that there is no alignment. The market is indecisive, right? Because the transportation is a very important part of the economy itself, right? Without the transportation, the industry wouldn't work, and without the industry, the transportation wouldn't work either. So what's happening on the industrial side is influencing and impacting what's happening on the industrial side. So ideally, both of those movements rally together, right? Or move together in the same fashion. If they do move in the same fashion, the Dow theory, the actual Dow theorem of the market averages confirming each other confluently just provides a little bit of stability, some stable background, right? Some no abnormal situation, right? On the S&P 500, again, breakout out of this local consolidation, support resistance retest at the area of previous retests. Again, if we break it, arguably we may take us closer to 4,200s. Until then, the bull market is up. The trend is lifting up, lifting higher. We are progressing. So it is a corrective opportunity. There's a buying opportunity more than it is for selling because we are moving up, right? Again, notice that I'm not giving you any of my opinions, right? I'm not talking about opinions. I'm talking about the facts. I'm talking that this trend representing the relative strength ratio between the XLY and XLP, which is risk on, risk off ratio, it basically moves up on average. This is a fact, right? This is a fact. When I tell you that from July until now, the moving average representing 200 days of average price changes relatively, risk on, risk off is rising, it tells me that the risk appetite is growing, that the XLY is getting stronger against the XLP. So the consumer discretionary market is getting stronger and overlapping, or I should say, taking over the momentum stronger than the consumer staples, which is defensive. So this is a fact, right? Also, it was a fact that for the entirety of 2022, the market was moving down up there on average, right? The trend line here is upwards. There was a clean market rotation since 2023 started, the series of higher highs and higher lows, right? This is a very classical example of an upward trend, and the moving average and the slope. And the direction is upwards. The slope is getting stronger and more aggressive, right? We were flat right now. We're kind of like, again, getting faster and stronger, right? This angle and slope getting stronger tells you about the momentum a lot. So the momentum of the relative strength changes between the risk traders and the defense traders is getting stronger, which tells you that this is a bull market condition. Here is a point to note. XLE, right? XLE, which is fairly interesting. By the way, I hope that you can hear me properly. Let me know, by the way, if you can still hear me properly, if you are still watching that. Drop a comment so that I can actually cover some of the questions. If you have any, I'll do my best not to ramble myself to death and yourselves to boredom. And in the meantime, again, XLE, right? The energy sector is important because if the energy is expensive, then you have less money in your pocket, less disposable income that you can invest and deploy in all the markets, in financial markets. So less liquidity, less buying support, less buyers, fewer buyers, less buying power, less support cushion, prices more likely to fall lower for the aggressive stocks, right? So there was a little bit of a of a local rebound in the stock seasonal weakness of August, September, which is where the XLE started outperforming the S&P 500, right? The XLE, the energy sector, started outperforming the XLE. Otherwise, we are still in a declining manner, right? Even though locally it's been inclining, this overall longer tendency, has been to the downside. So if we watch the averages more likely would be kind of like flat at best, right? So I don't know, perhaps we're going to be able to get this one overlay. If we get the moving average, let's see, simple moving average. And if we get, I don't know, 20-day, 50-day, let's give it 200-day, right, for the trend. What is it going to show us, right? So pretty much it. So that there is a flat, kind of like a declining mode of the 200-day moving average, relative strength, again, similar to what I showed you before a moment. So that's a study of a relative strength. It's above the average, which may be a potential reversal. Still, the average is coming lower, right? Which tells me that, again, this is a bearish environment, right? The XLE is weaker than the SPX on average. Still, the tops, right? We marked the third top in pretty much the same area, 91. First top 87, 88, right? 91, 30, almost 91, 30. 90, 71, and the new all-time high 93, right? So this is kind of like above 90. It's getting tense. It's getting condensed in a way, if there's such a word even. So arguably, again, historically we reversed so many times there. So even though it may make little sense, right? People take into account the most recent history and they anchor, their minds. We tend to anchor our minds, and just because we look and here's what happened, here's at this area, kind of like reverse, so we immediately start taking it and extending that into what's happening right now, basically, right? So extrapolation is happening in our mind, and we take actions based on what we think. So here, therefore, I would argue that we might see some pullback, reversion to the mean towards 83, 84 area. And if that happens with another peak failure, we would have first peak failure here, another kind of like a failure here to reverse and push higher, and another new higher highs, and another failure without that follow through. So consequent failures on top instead of reliable breakouts tell me not only that the trend has flattened, the trend is flat on the 200-day moving average, right? Which tells me that, again, this is a decisive confirmation of a bull market, bear market, or some sort of like a stagnancy. So it's moving that it's barely moving up. It's mostly a stagnancy. Even if we go to the XLE over here, it's going to be, it's lifting, but it's mostly flat right now, right? It's mostly flat, even though overall for the earlier part of the move of this year, it moved up. Now it's fall. It's kind of like falling flat. That's what I meant to say. So be mindful, at least if you're betting on the energy, you might want to bet safe, right? Because the energy might be running out of the power, might be running out of the steam. And if that happens, and if it falls consecutively and consequently for the fifth time in the sequence of past year, it may be the proper distribution channel. And if this is a distribution, which might be confirmed again due to the relative strength weakness, arguably again, we may see some further reversal, right? So energy, of course, is responsible a lot for inflation. So the recent inflation spikes, have to do with the rising energy. If the energy comes down, the inflation comes down, the monetary policy gets softer and smoother, right, and more towards quantitative easing rather than tightening, and the economy boosts economy bursts, expands, the markets also react positively to that. Hope it makes sense so far. Let me know, guys, if you can hear me with the questions, right? Let me know if you have the questions. I'll do my best to answer some of them at least. By the way, if you're on YouTube, make sure you hit the subscribe button, smash the likes, hit the notification bell so that you stay tuned every time we put out a new content. And man, oh man, we've been cooking behind the scenes like crazy. This year, there are so many projects that we are gonna release on the Burpnest, right? This is incredible. We're still closing and then getting closer to announcing some of the major works that we've been doing. Though you can believe me, it's gonna be huge. It's gonna be a game changer on so many levels. One of them has actually been shared already on Twitter, right? So how it all fits into Bitcoin. Bitcoin is slowly becoming a tech stock, right, over the years. So the long-term correlation is grown almost by 400% since 2015, right? So the correlation is getting stronger to the Nasdaq rather than to the S&P 500. So Bitcoin is more likely trading like it's Nasdaq these days, more often than it is overall for the S&P 500 for the large cap stocks, right? So speaking of the trends for Bitcoin, well, what can we see? This is a Barbicator Pro study that trend, not a simple moving average, it is a custom indicator that we got designed within the Barbicator Pro toolkit that is not available on public. This 200-day moving average, or Barbicator Pro, it's called baseline, and it's basically giving you a signal for the bull market breakout at around $19,000. I think even it was earlier, it was $18,000, right? And the next bull market signal that it got was basically kind of like 2 or 3 months late from the simple moving average, right? With the simple moving average, kind of like gave you a 3-month late notice. Here, the bull market was obvious. I should say, well, obvious, take it with a grain of salt. It was fairly signaled, basically around 18,000 in the beginning of January, at the beginning of year, right? And it continued to move up for 8 months straight, right? Gaining from 15,500s all the way to 32,000, almost more than 100%. This is not something to be ignored, right? So 100% movement the last 8 months on average is not a bull. It's not a bear market, guys. Right? When the averages are moving up, when the prices are moving up for 8 fucking months straight, it's impossible to have it in the bear market, right? So right now we are having, of course, in dealing with seasonal weakness. Like I said, stocks and cryptos are trading similarly. So we're looking at the seasonal weakness from August into September right now, right? So that was, again, in line with the expectations. All my tweets up there was big warnings with the big bold statements and question and the what do you call that, exclamation marks to watch and beware of September, because September is a month of declines next to August, right? Two weakest months on the record ever. So of course you don't know the future, but same you don't know the future weather, you would still not necessarily take the thickest jacket you have, the winter jacket, right into the desert in the middle of the summer. Even though you don't know the future, you don't have to know that, because you watch the past temperatures and you know when you check a temperature to leave the house, before you leave the house to decide which clothes you take. Same way you read the prices on Bitcoin. So the same people who say that technical analysis doesn't work and they take a measure, they look at the temperature in their phone before they leave the apartment to decide if they take a jacket or not, there is some cognitive dissonance, there is some bias, right? It's emotional and it's not good. So what I'm saying is, again, $25,000 support defended so far. There was a little bit of a tweak, a little bit of some uncertainty, of course. We're getting close to the average $28,000, again, round number resistance, also induced additionally by the Babe Wickeder Pro average trend. The average trend has been going down. So what it tells you, right, it gives you a very sensitive, it's a very recent kind of like weighted data. It gives you an insight into following market in the past 2 months, right? So that's the major trend. That's the overall tendency. However, if you take into measure what's happened since January, we're talking about 90% of the time market being in the bull zone and 20% of or 10% of the time being in the bear zone, right? So what it tells you, it basically tells you about the condition of the market, right? So local, it's mostly bullish, right? It's a bull market with local seasonal weakness. That's the way you look at it. Of course, since again, regardless of what I think about that, the trend is down. The trend is down. So if the trend is down, if the dominant trend is down, this may not be necessarily the best favorable conditions for the bulls, right? However, September is also the weakest month of the year, minus 6.5% averaged out of 13 years, right? It also means that it is a month of opportunities, because if you want to buy low, you want to buy in September, right? If you want to buy high and the best momentum, the best certainty, then you buy in October or November or December, right? Or April, and so on and so forth. So far, support 25,000 defended. Since the trend is falling, I wouldn't necessarily expect that 25K may hold, right? Again, I have no idea what's going to happen, right? All that I know is that watching the trends, the volatility trends at the bottom, the ATR, average ATR, 50-day moving average of ATR 14 was basically climbing, was basically falling lower since May, right? So the trend was the best supported ever since it started, or until it started moving sideways, which makes sense, right? So we're not necessarily in the most consequent upward trend, even on the price action side, because if we eliminate all of the averages, if we kind of like disregard all of the averages, we're moving sideways, right? For the past several months, we're moving sideways. So past several months of the average sideways movement, which is pretty much confirmation from May, the volatility has been going down. The volatility typically goes down in the sideways, right? Because when there is a box developing, when there's a rectangle, people typically feel more uncertain the longer it takes to develop, right? So they would take out their buy orders, they would take profits more eagerly. So the range kind of like starts tightening. Consolidation starts tightening, and what often happens is that you have a period of declining volatility, and after that you have a period of breakouts. You have a period of inclining volatility, a breakout to the upside or to the downside. Whatever happens, a new trend comes up. And arguably, looking at the back of the history of Q4, 50% average return over 13 years, I would argue that we are heading for a positive close of the year, a positive Q4. I have no idea what's going to happen for sure, though the expectation is positive, right? So even though there's seasonal weakness, the trend is moving down. Again, there might be some weakness that we may head, lower to, I don't know, 20,000 to 22,000. Who knows? Right? We bounced at 20,000 up there. I bought there early in March, publicly disclosed my purchase. I disclosed all my purchases and sales online on Twitter, X, I should say. Right? So who knows? Maybe we get to 20,000. Maybe we get to 23. Maybe we go to 2024. Maybe we slide below 2024 500s and immediately revert higher. Again, just what I'm saying is that the local seasonal correction might be coming to an end soon. The trend is moving down, yes, which means that bears are locally stronger than the bulls. However, let's not forget about 90% of the time the bull trend, right? And local seasonal weakness, which came in line with the expectation. That was expected. I posted about that. If you scroll through my Twitter, it's full of tweets of seasonal weakness for August and September. That is in line with the expectation. Nothing surprising there, right? Still, since there is no difference in expectations pretty much and what's happening, I would argue that we're heading for a positive close of the year, right? So I want to see positive breakout above 28,000. If it happens, most likely we are getting some fuel towards a positive Q4 rallies, right? This is typically what happens. October is a strong performing month as well. However, until the bottoming process that typically happens in September, October, there may happen that we may see a couple of more slips, like I said. So the trend is bearish. For now, seasonal weakness isn't playing intact or in line with expectations. So I would say that you might want to be ready for catching some hot dips, because the hot dips typically come in September, which is the only losing month on average. Hope it makes sense. So my trend system on the Burbicator Pro, current time frame trailer and high time frame trailer. The high time frame trailer is kind of like set on the bearish side ever since, when was that? And since July. It flipped bearish, right? And then it remains bearish, and it's remained bearish since July. The main resistance is pointed at 27,353. So 353, yes. So round numbers, let's approximate it to 27,500 for the sake of giving some margin of certainty or buffer. So I want to see a major price action basically pop after 27,500, right? Again, this is educated guesses. Let's take it with a grain of salt. Do not necessarily, put your life savings on it. Do not necessarily take any word of, education here as a necessary advice, because even though I'm entitled to financial advice, even though I'm entitled and licensed for investment advice, I'm not giving you financial advice or investment advice because, I'm sorry to say, I don't know you, right? And how could I give you advice? How could I give you specified financial advice if I have no idea, what is his financial situation? So take it with a grain of salt. Let's not be over enthusiastic about that. Still, my trend is running. My trend trade is running since that was, when was that? 26,200. That was my entry, also public. Right now, it's kind of like stop loss is up there, getting close. So I'm basically at the break even. I'm pretty much at a break even, like less some, I don't know, minor margin costs, some very small costs. All right. So my position is right now either slightly underwater. I mean, it's positive, right? Because I bought 26,200. It's right now 26,700, so 5,600. So I'm basically in profit. Still, what I'm saying is that it's almost risk-free, right? So I'm just waiting for a little bit of a move up. If it happens, and if it does, my stop goes up. I'll trade a little higher, and I'm in profit, regardless of what happens. For now, it's kind of like somewhere on the line. So this is about the trend update. Locally, again, the the momentum bats are heading lower, so arguably 26,300s are as a support given by the level lines. If it breaks, it may take a little bit more bearish stance. So 26,300, 26,400. Now take it or leave it. 26,000 also is a level to watch, right? But indicated by the low band. So 26,400, 26,000. Take it as a potential buying support area. If it does fail, then arguably we may see 25,000 next, right? And if that happens, all my trade is canceled and is stopped. The altcoins are still relatively underperforming Bitcoin, right? If we take the measure of the August bear market rally last year, August 2022, right? For the point of reference, we might see that the highs for Bitcoin were broken and the lows are defended for now, even though it's trading slightly under the average, which means it's underpriced, undervalued. Now for the altcoins never broke higher, right? Just like Bitcoin did over here. So the altcoins are in weakness. Altcoins are in relative underperformance. And remember the volatility is kind of like going lower. So the volatility going lower means that there's less interest. Vacation came in, people prefer to chill rather than spend all the days in the what do you call that? In the pool, right? So again, that's something to be considered. The altcoins are not necessarily the best choice right now, mainly because they're lacking strength. If they're lacking strength, they're not the best buy, right? You want to buy strength and short weakness. You want a long strength and short weakness in the name of momentum investing. So, and then there was a funny point about the death cross, right? Because the goal, technically, there is a popular way of saying that any crossover of two moving averages, 200-day moving average, which is the red one, and 50-day moving average, which is the blue one. If there's an upward cross of a 50-day over 200-day, it's a golden cross. If there is a negative cross on the 50-day below the 200-day moving average, it's a death cross, right? That's what it's called, golden cross and death cross. So what I did, funnily enough, right? I literally commented before I went to sleep. I made this tweet. I posted this tweet. Where is it going to be? There you go, right? So let's take a look. Bitcoin confirmed classical death cross, which is something that happened. The crossover took place. It took place exactly here. It happened literally here. This is a crossover. The 50-day average crossed the 200-day moving average. This is a death cross. It doesn't imply anything about the future per se. It may or may not, right? I made a comment. Sorry, I didn't make a comment. I just stated a fact. Bitcoin confirmed classical death cross, right? And funnily enough, there was so much of the bearish kind of like people, right? Saying, how do these people get so many followers? Like, what is it? That like all the if you like, of course, I'm not gonna spend so much time scrolling that. If you go ahead and check this tweet, you're gonna take some good love, basically, because it tells you about this. Oh, there we go. It tells you about the sentiment, right? If I state a simple fact, when I state a simple fact, not a single piece of opinion, I'm not even commenting about that, right? So I'm just stating a fact, like saying, hey, the sky is blue, right? And people rage at you for saying that the sky is blue. Then it tells you that they are angry. There's a lot of bad vibes. There's a lot of fear, right? And if we go to fear and greed index, here's what happens, right? So fear and greed index is, guess what, is in fear, even though it's 43, right? It's been a couple of days in 37. So there was some almost extreme fear. We're basically in fearful environment. This is typically what happens in September. And when it does so, it often happens as well in the disbelief stage of the market. That same thing happened in the previous pre-election year of 2019. I remember that exactly. I also posted a tweet about the disbelief in 2019 in September, right? And guess what happened later, right? We got to see some massive rallies. So disbelief in this, when there is the greatest amount of cognitive dissonance. Cognitive dissonance is this mind fuck, when something that I say just basically triggers people. When I say that the sky is blue or that there was a death cross that happened and people get so angry, this means that there's a lot of cognitive dissonance, right? They get angry because what I'm saying doesn't fit in their own agenda. It doesn't fit in what they think or what they expect. It doesn't match their opinion, so they get angry, right? So there is cognitive dissonance, and this cognitive dissonance is called denial, is called disbelief, because you deny the reality, you deny the facts, you deny the fact that the sky is blue, you deny the fact that there was a death cross. So if your mind denies something so strongly, there are a lot of desperate people, and there are a lot of desperate people in the market. The market is low. It's been through some corrections. However, the good news is that you typically want to buy into fear. You want to sell into strong optimism. You want to sell into extreme greed. You want to buy into fear. The more extreme, the better the buy, right? So this is a little bit of a funny anecdote, side note, for how you can track what's happening in the comment section under certain tweets and check the reactions. If people state facts and people go aggressive about that, this tells you something about the sentiment, doesn't it? Right? So that's pretty much it, right? So let me take one or two questions real quick. Eric Hollett, much thanks, Adrian. Good to have you. Very good that you're watching that. What's your take on bears calling a sub 20K BTC crash? God knows. Perhaps may happen, right? Listen, if that happens, I'll be over the moon. I'll take all the cells that they give me. I'll take all the buys that I have and just load the fuck in it, right? I promise. That's. I'm not gonna miss this opportunity. That's for sure. Tomek, Shema Tomek, isn't a war in Europe a changer? Well, war has been going on for almost, it will soon have been 2 years, right? In February, it will have been 2 years. So you tell me, do you think there is a change? Has it changed the way that Bitcoin was going up? I wouldn't say so necessarily, right? Typically, the war, listen, the whole beauty of observing the charts, the technical charts, is that the price discounts possibly almost all the information available. So you don't need to watch, if you want to trade charts, you don't need to watch the media, you don't need to watch the media stations, you don't need to watch the what do you call that, like the war, you don't need to watch the economics, what's happening on the macro side, you don't need to watch FOMC, you don't need to watch, I don't know, the weather for the crops, right? You don't need to watch all of that, because guess what, the price discounts everything. So the only chart that you need is the chart with a chart, the chart of Bitcoin, because all the price movements are reflecting the human behavior to discounting all of the available information. We don't need 50 charts. We just need one chart with a price that tells us the true story. That's the whole beauty, right? So if there was some change, if this was a changer, the price would have gone down, I guess, right? And it didn't. Good question, though. Very good question. What do you think are the most useful indicators to use? I would say that the simpler, the better. I would start off by saying moving averages, the volatility indicators, volume, all the techniques, right? Such as observing price action. Price action, you can observe the price itself, right? Because price discounts almost everything. So you may observe the price itself, and if it moves higher highs and higher lows, this is an upward trend. If it moves lower highs, lower lows, it is in a downward trend. Anything else is a sideways, right? So you may observe the price alone. You may observe the volatility, right? So the ATR, average true range, how volatile the market is. If the trend is strong, the volatility grows because the aggression grows, the faster it grows as well. Lack of volatility means sideways. If you use volume, right, you can use volume. You can use as well which is the number of transactions. You can use the breadth, the market breadth. How many coins are above the 20-day moving average, 50-day moving average, or 200-day moving average, right? If there is a coin that pops up, 10, 20%, but all 99% of the market is down, then it doesn't tell you that this one coin basically makes the whole market a bullish thing. 99% of the coins are down, but this one just pops up. So it means that this is a lone rider. So perhaps proceed with caution, right? And so on and so forth. So there are a couple of techniques that you can use: trend lines, moving averages, and the trend breakout ones, right? You want to observe the trend breakouts. So the best confirmed technique to make money that is the most profitable or reliable is a trend breakout, right? So you trade trends in the direction of a trend confirmed by the breakouts, confirmed most likely by either volume, by the price distance travels, by the volatility spike, by the volume spike again, by the breadth spike, or by the time spent. If the price spends 8 months for Bitcoin to test what it did above the moving average, then this is not a coincidence, is it? Really hope we see 2022K again. Privately, I do hope so as well. My isolated shorts are in my spot long orders around 24,500s. Sounds possible. Sorry, I'm having a hard time understanding the question. Sounds possible. What is possible? If we get to 24,500, yeah, sure. Why not? Is point and figure valid on BTC? Of course it is, right? It's just like use the daily chart, the candlesticks or the bars or whatever. You could use the point and figure, and it's going to show you the information as well. Elliott wave, same as well, can be used. Listen, I need to wrap. Before I go though, the project I told you about is a hyper giveaway project. One of the projects, one of the releases, we're getting 2 people. First of all, you can win $100 by just liking and retweeting this post. It's pinned under my tweet, so feel free to go ahead and then give it a like and a retweet. It may take 5 seconds at best, and you may be the lucky winner for $100. So I guess it's worth taking a look at least. What it does though, mainly, it is a hyper giveaway. There is a new project that I call the hyper giveaway project. It's basically waiting to be released. We're waiting for Twitter to give us the green light, basically with approving the subscribe button. Because in short, we want to reward people on a monthly basis, right? And build the community bigger to reach out to more people. And every community member can get a chance to get rewarded every month. We aim to create the biggest giveaways on the internet. If you've heard of Mr. Beast, then we want to beat Mr. Beast with those giveaways because there are no limits. The giveaways are going to depend on how many X subs there is going to be. If there are 50,000 X subscriptions and each subscription costs $2 or $1, then all the money pulled every month gets to one winner. I take nothing. I earn 0 on it. All the money that we collect via X subs go to you, go to one winner every month. So we can take part. If there are, I don't know, 1,000 people on subscribers, then you have every month you have a chance, 1,000th chance that you win every time, every month. It's a good chance. It's a very good chance. So you'll earn literally for being a subscriber. It's not me earning for you being a subscriber. It's you earning for being the subscriber. I don't take a cent. I don't take a penny out of that. So the more subscriptions, the bigger the win. 100% goes to the winner. We don't take a cent on it. Entry cost is close to 0. We're gonna set it to minimal requirement. I don't know, like 99 cents on 199, but the lowest minimal. The transparency, we're gonna give the rewards every month publicly, right? Shooting videos, share the public statements, public audits, records, proofs of transactions, everything. It's going to be fully transmitted, broadcasted live so that there is not a single point of doubt about that. And it's going to be available worldwide. So if that sounds cool to you, you want to stay tuned for the Hyper Giveaway project because it's right around the corner. We're just literally waiting for Twitter to give us the subscription button. And if they give us, you may take part and win money every month. That's why I call that the Hyper Giveaway project. It's not just a simple giveaway, because eventually we may give away tens of thousands of dollars every month if there are thousands and hundreds of thousands of people who subscribe, and that's the goal, right? Then one person every month can win $1 million, $2 million, $5, $10 million. There are no limits. So just maybe we're going to create the biggest giveaways that the internet have ever seen. That's the Hyper Giveaway project. If you like this, make sure you hit the like and subscribe on this YouTube channel if you're watching that on YouTube channel. If you're watching that on YouTube, also do not forget to hit the notification bells so that you stay notified every time the new release comes up, just like this one. And before I go ahead, check my Twitter X profile at crypto_birb, BIRB, like the Barbara. Go for it, like and retweet, like and share the main post that is pinned. Take part, and it may take maybe the easiest money ever made, 5 seconds or less for clicking 2 buttons, and you may win. You may win $100. And after that, you may want to stay close. You may want to keep tuned and stay tuned for the Hyper Giveaway project big launch. We're waiting for Twitter to give us a green light, the subscription button, because when they do, we're opening the chamber and all the money can be yours. That's all, folks. If you enjoyed that, God bless you. Welcome. I salute you for watching that. Congratulations. You are the pioneers. You are early in the cycle, and may God be with you. Thank you so much. God bless you. See you around, and bye-bye.